The U.S. median home price declined for another month, and the latest housing market data show that we could expect more in the months ahead. We're going to look at all the latest data in today's video. Let's get into it. Welcome to Real Estate Watch, the channel that focuses on forward-looking real estate analysis. My name is Eric, professional economist and licensed real estate agent. We're looking at the latest housing market statistics today, and the market shift that we've seen in the last few months has continued. According to Redfin, a national real estate brokerage, the U.S. median home price for May came in at $431,000 on a seasonally adjusted basis, which was down 1.1% from the December peak of $436,000, marking the fifth consecutive monthly decrease for the U.S. median home price. It's not a big price decrease at all, and looking at the median price alone, one might think this is just a minor slowdown. But when we look at the underlying supply and demand data, we can see that the market has shifted in favor of buyers and that more price declines are on the way. Let me show you what I mean. Looking first at the demand side of the market, demand is weak and keeps getting weaker. Home sales remain at historically low levels, and even the lower prices we're starting to see has not sparked a rebound. The sales to list price ratio, which is a good measure of the intensity of demand, remains below 100 and in May continued heading lower. The average number of days on market before a home sells ticked up in May, resuming the uptrend we've seen over the last few years. On the supply side of the market, there was a slight pullback in new listings in May, but the overall uptrend is still clear. More homes are coming onto the market than are being sold. The pullback in new listings is reflected in a slight pullback in the month supply, which measures how fast the market inventory would be exhausted at the current pace of sales. But the month supply has also passed its pre-pandemic level, indicating a higher than average supply. What happens on the supply side of the market will be key in determining what happens with prices. Demand is weak and getting weaker, but if the pullback in new listings continues, the decline in the median price is likely to slow down or even stop. But if we keep seeing a rise in supply, I expect prices to continue to decline. From an affordability standpoint, this market is just too out of balance. As of May, the average housing payment as a percent of the median household income was 38.9%. Still above where it was during the last housing crisis. It is hard to imagine that the U.S. housing market can continue in this state of unaffordable housing in perpetuity. The key indicator to watch in the months ahead will be supply. I recently did an analysis of the Austin, Texas and Oakland, California metro housing markets. These are two housing markets that have seen the biggest price declines since the pandemic era peak, and for both of them, supply has increased well beyond what it was before the pandemic, which has been a big factor in the price declines for those two metropolitan areas. That is why supply is key to watch right now. I don't have any expectation for mortgage rates to come down in the near future, so demand is expected to continue to be weak. The decline in the U.S. median home price and the overall trend in rising supply suggest the market has indeed shifted in favor of buyers. We'll need to keep an eye on how these trends continue in the months ahead to assess where the market is headed next. If you like this kind of housing market analysis and want to stay up to date on the latest data as it comes out, make sure you are subscribed to this channel and hit that notification bell down below so you won't miss my next video when it comes out. And don't forget to hit that like button on your way out to support the channel and help it grow. Thanks for stopping by. I'll see you in the next video.